So I'm scalping the Dow Jones, going to open here pretty soon, so I just went long for the breakout here, but I'm going to get out and reload on pullbacks, because typically what happens here is, like what happens all the time, is they come up here and it's a breakout for the guys on the longer time frame. So if you're running the 4-hour chart, you're looking at this breakout and you're thinking, oh, that's great, we're going all the way to here. You probably are, but this would be the next place to hunt, the next place to hunt. So all the stops are piling up here. If you mark off the swing highs, and then we got super quiet here. So this was the entry for buy stop stacking up, and actually this whole vacuum looking to fill, we filled to here, which coincides with the last kind of window of price, the prime zone to get, and so they blew through this fractal. They come up here, then they have to take all the way back, and it's a game of stop out. And so even here, this top becomes a bottom, This whole floor here, this is the base. Well, there's only 2 days left of trading, so it looks like we're going to go after this today. Here, spike up. This is the 100 pip yard line, and here's the 50. I made this a little bit smaller because I was way zoomed out earlier and I couldn't navigate all the data. If I go to the 1-hour chart and put this on a so you can see from a volatility entry standpoint, if you only pull the trigger, or you only load in your stops when you're below 20 pips here, you got your sell stop stacking up, so you're in on these moves. Your buy stop stacking up, here's going sideways, fall through the floor, here's the floor, there's the ceiling, there's the floor. So just ceilings and floors, and looking to buy in pullbacks now inside of that range. So inside of this, if you're a 10 to 20 pip profit trader, you've got about 4 hours of trading right there, a good 4 hours. Here's a nice but yeah, that was the stops would have been stacking up here. You would have been gap open filled on Sunday night. You would have bought at the round handle just because it is the round. Sell at the 50, and you know, so there's to it. Here's the buy stop trap, but since you're in a 10 pip window, you need to be running the sell stops here. So it's very you know, they have this binary trading. This is really the original binary trading, is this thing. You're just putting in stops here. You got a narrow bar. It's a doji. You don't know what the hell. Maybe it's going to tumble here. You don't care. So this is like it's all about not caring. So all the things you learn in life about caring and stuff don't apply here. Caring's your enemy. You care, you're screwed. So I put this other thing in here, which is I'm testing out a canvassing order. It's going to buy every 10 pips for an hour. At the same time, I'm going to overlap that with this order, which is going to buy, in a half an hour, it's going to buy a psycho plunge. So ideally, what I want to get going is a psycho plunge order that captures in zone. So I have to break out the other keyboard that I was kind of reluctant to deal with because it's got about it's a cherry keyboard, and this is like playing music, these markets, as far as I'm concerned. When a certain song comes up on the radio, there's a certain way you would dance to that typically, right? I mean, so you have to dance with the market, and you have to have orders that, now I can put these manual ones in, but I mean, I just seem to get lazier and lazier the more I look at the possibility of just going full automation. Of course, the reason why these orders, in other words, an order bank like this, say, that's going to get in a dense pack right at, say, So my buy orders here. This is like an 8 pip stop. Now, if you put this order down here, there's a high likelihood that when the market slams down here, that it's going to come down with such a fury that it's going to take you out. Now, here's the 1 minute chart. So if you're breaking out, if you're doing fractal breakout here, it's gonna be this stupid. You're going to put buy stops here, or you're going to sit here and babysit this puppy as it drops for 5 minutes, and you're putting in buy stop, buy stop, buy stop. You have a buy limit here because you know this is the last known flag, triangle, what have you. Anything that you get a sideways market, something's up. We're probably going to continue. And if we don't, here's sideways and we went up. So this kind of very non-directional trading is a little tough because, you know, the only way around it to really, in other words, put a slight bias in this. You have sell stops and buy stops, but actually, if you have just as many buy stops as sell stops, it's not going to matter when you get this explosion. You know, this is a key level here, so if you've got this across, and you know when you come to this flat top, that you're going to see some drama here. And wow, 4 minutes, you just crushed right through the round number. This is the 30 pips up and down on this thing, and we could come all the way back to here again. You know, this is since it's all frantic movement up here, you know, just off the bat that you know, so for the quiet entry person, the person that doesn't want to really get involved with too much antics, you can run 8 pip stops in this zone here. I mean, you got sell stops stacking up here. Okay, it just goes, you know, just go with it. It doesn't, if you trade buy stops, sell stops at the same time, yeah, you're going to get stopped out of some of these, but you have 5 and 8 pip stops on these things, looking to make 20 to 30 pips. You really have to design orders that look like this for the stop. This is your risk, and here's your reward. So you're entering here, and there's your exit. Here's your take profit. There's your TP. Here's your entry, and here's your stop. Stop losing. But you've got several of those, and the thing is that getting these things automated so you don't have to, and you know this stuff's going to happen over and over again. You don't have to sit here and watch. Then you have the hand place drops. Now, if you do just the simple stuff like this and say, well, I'm going to get in down here, then you just figure out, well, that's going to be 30 pips deep, so I'm going to have a buy limit sitting here for the next, say, 2 hours or 4 hours, and then a buy limit sitting here for like 8 hours, and a buy limit here for 12 hours. In case you're not here, market plunges down in, fills that order, ricochets out, your stops here, you take profits there, you got in there. This one, you're going to get in here with a stop here and there. I mean, this one goes up. It's a very elaborate system of entry. And the thing is that in the morning, okay, we're going to have, so we have 5 minutes of Dow Jones has been open. And this is a 10 pip pullback on the euro dollar. You've already trapped these guys on the larger time frame. So, you know, you've trapped these people for 10 pips. So this would be the 10 pip. If you have sell limits here, you're taking profits right now. That was the scalp. But maybe that's over. And now we're just going to go ripping up. And that's always the thing. We're going to go ripping up now. So in the 1 minute chart this time of day, this is no longer a noisy chart at this time of the day. Especially once you get a 1 hour session that's over 40 pips. Now you have to really drop down to the smaller time frame and pull off the side of the road there and get a beer, because it's going to be nuts here on this thing, especially all the pressure. And if you take a look at the stock markets right now, this is the monthly stock market. Are you going to tell me this puppy can still go up? And look at this, you're coming up on an eternal bottom. This is gold. Gold could get to 905 and 9 in the 900s. And holy crap, the buyers are going to come in like you can't believe down there, right? Certainly all these guys that are bullish, and you can kind of tell when you see a plethora of, like, I don't know if there's a way to look at the YouTube count of certain kinds of YouTube publishings, but I mean, there's got to be some correlation between YouTube publishings and the amount of stuff where you know, there's like too many people talking about a topic. You're in trouble. So here's a pullback. It looks like we're gonna get a pullback here. So I wouldn't want to chase this thing from the standpoint of look where we're at. This is the 10 pip trap. Right now they've trapped these bullish people. So I will buy the pullbacks. And had you been around for this trade, I would say the best two trades this week from a volatility breakout standpoint would have been, okay, here's Monday. Monday there's a raid of the 100 pip handle, goes 12 pips deep. Then they rip it up. You would have doubled your money. You would have tripled your money. You know, you would have quadrupled your money. This is about getting in at where everybody's got their stops. So say somebody's got a stop here, and people have stops at break even, don't forget. If they got in here, they got their stop here. Like they bought here, they wrote it to here, and they move their stop to here. They move their trailing stop to here. They're fueling the sell-off. You know, it's not, the market isn't some type of, you know, there's people placing orders, and all these bearish protection buy stops to get long on there. It's cleaned out. Okay, here's the pullback coming. So on 1 minute chart, I'm going to start placing orders back at fair value at the starting gate. And if I don't get the starting gate, I'm just going to have to judge this thing on the sheer drop rate of descent. You know, kind of looking at the 1 minute chart here and just saying, oh, you know what, I would buy it at the round handle here. But I have to withdraw my order after a certain period of time because I cannot sit there. And this is the same thing if you go to eBay or anything like this. If you notice an auction market, which is really what this is, all you're looking at here is the reason why I reduce all these indicators just to the range only is because it's really about the pauses and the going with the order flow as opposed to getting all I guess analytical or getting all focused on your ability to draw lines on a chart, which that's okay, but I think maybe that's a weekend gig. When the market's open, you know, if you have a trade plan ready to drop for market conditions. Now yesterday when the FOMC came out, I was thinking, well, you're only 100 pips from the all-time low on the euro dollar for the year, so we could go right through the floor and just keep going. I mean, there's really nothing. You know, once they start looking for liquidity and they don't find it, that's what makes a market just literally go right off the chart, either way, up, down. And then this is when you get these kind of like, wow. This has been pretty frisky here, so this whole accumulation phase, which I think you'd have to say in the most crude terms that this would be the accumulation. If you see anything that goes up or down a couple times, so in Wyckoff theory, this is the distribution phase, and then there's the markdown. But once you start trapping these people, and this was pretty quick and dirty. This was FOMC, so this was really quite a bit of behavior here, and if you were on the smaller time frame, you could have traded that. I was trading that with 50 pip to make 100 pips, trading with 25 to make 50. So you just pick the ranges you can handle. So here, for instance, you're placing an order to buy on the failure of that with a 10 pip stop. Here you're going to buy where everybody's got their stops. You're going to put buy limits here, especially these dojis here. Now, I don't think I'm going to get a chance to get long this thing, so I'm going to put in super tight buys, 15 minutes here. And then here's my half hour, and then I'm going to put this other keyboard up that has kind of hot spots like this. So I made this keyboard one day, and I programmed it for these things I call, well, they're kind of like little mini icebergs that I would put down here, and Now, if I calibrated it in 20 pip grid, I would know that if I hit a certain button, I could get 8 pips deep. The problem with that is that what if I need to get 160 pips deep? Well, if this lasts 4 hours, then I would just wait for the market to drop another 50 pips and start laying in the. As soon as I press that same button, it would now be 80 pips in front. So the original concept is that as the market's dropping, every 15 minutes it's dropping, you're putting in, say, 15-minute balls in front. This way, when the market comes plunging into those ball banks, it's going to fill it and retrace it. It only makes money if it retraces. If it keeps on going to hell, it's going to stop out the whole bank. But the clever part is to judge the prices. So if you consider this to be in auction theory, this is fair value because it's the middle of the road of all this price that we've so far had, then it's just a matter of, okay, well, I'll put orders in here that last 12 hours. And I don't care what happens, because when Europe opens and they have to take it back to the inventory zone, the supply, and you hear people talk about this stuff, and I think if you can't see it in a 10 milliseconds, it doesn't exist. You're forcing, that's the one problem with the, yeah, sure, you could put a trend line on here. We've already met the target. Like for the people that were trading this top of the channel, they're getting the hell out right now anyways, right? You just don't need too much, or maybe I'm just seeing too many charts to, oh, here, a huge pullback now. Okay, so as you're coming in, now I'm getting a chance to fill here. To turn off my, so here's my big, now that the market's moved, I can drop the same scripts again, because now they're going to be placed 10 pips deeper. Okay, this looks like some wicked changing of the guard here. And now they trap these guys. Now the guy that sold up here with his target to here, he's already out of the trade. He's gone. Here we can come back, seriously, another mind-blowing amount of pips. So here I'm putting in this, this is my, well, the theory came, this lasts for an hour. So it's a very aggressive entry, and then here is the next most aggressive entry, is to get in, oops, let's put a sell in there externally. Here is the big plunge bank down here. So if I don't want these orders in here, I just pluck them off with this close order script. They come up here like this. Okay, so now it's just waiting for the smash. Now they trapped these guys, and they trapped them on the 4 hour too. And this is why, you hear these people talk about the 4 hour charts for the big boys. It all depends how you enter and exit these things. I mean, who cares, right? This is 1 hour of just insanity. So this guy asked me about, I don't speak French, but in essence, the idea here is, when the market's on fire like this, it's about getting in on limits. And if it was to pause and die in the water for go sideways like it did here, I get in on stops. So right now it's total limit fill. I'm looking for the complete plunge into this, all these orders here. So the ideal thing is to gobble up the market as it comes in. Now this is a less risky, but probably won't fill in 1 hour. But can you imagine the market plunging, sweeping through here? This is probably the all-time test in the euro right now. They're only 7 cents away from the big round number, and you're 10 pips above the round number right now. So if the 107 holds and the scalpers just cleaned up for 20 pips, so limit, big bar, you got limits out here, or you'd have a sell stop underneath the 1 minute, right? If you're going to get in on stops, it's going to be about every time this thing goes up, sell stop, sell stop, sell stop. Here comes the backlash. You're up like 5 pips. You take some off the table, you let it complete. Now you're up 20 pips. And, this thing could just go bombastic, and you'll make money, buy or sell. Actually, you're selling as soon as when you get into the long, you're going to be selling again anyways. So the idea that you're buying or selling is another kind of weird paradox, because if you bought, you're going to sell or you can't make any money, so you're going to be a seller. So you can think like you're always thinking, especially if you're a retrace trader, you're like, okay, I'm going to buy here and I'm going to dump here. You can already see the sell coming up. Okay, now it's a more ferocious plunge, so the more it plunges, the more I lay in these 1 hours that are spaced wider. This way, I don't overload the account. I won't put any more tight orders in, because now it looks like we're hell-bent on a big plunge down below 107, so we'll get that discount. Now I'm going to put one buy stop in, because I just had 3 minutes of down. Actually, I've had 1, 2, 3, 4, 5, 6. We got 6 minutes where the buy stops are stacking up. For the people that are short this thing, they're going to have to run for cover as soon as this thing backs up on them. So I'm going to play their protection, their insurance policy, and put buy stops in. Now that's it. That's the whole trade. Now you just have to sit and let it bake like a cake, and you can see how the bears are loving it. They're already up in this thing. They've trapped these guys in the 1 hour, and they're having a party. Another thing you can do is sync the grid. This one's locked, so this one cannot go past a certain amount. So if the market takes off in a psycho run, it might go off the chart here, but I'll still be able to see the fractals forming on the 1 minute. So here I'd buy at the market, because we're about to break out. And I got the buy stops there. So I also have I have no sells in here. The sell would have been right here, 20 pips. What is this? Yeah, this is like 30 pips above the round number. So you're already up 20 pips on that trade. Now I could drop all the way back to the round here, and so I got my buy stop stacking up on the 1 minute, and I can see in the rearview mirror that we're coming back into the. So this is the typical trap. Now some people, believe it or not, would put a buy stop here and a sell stop here and say, you know what, I'm getting long that puppy. I don't care if I have to take this much heat, which for some people that's the trade, to sell up here and then to buy back here, to sell here, to buy here, buy so. Problem, I think, for people that have a story in their head or have a trend trading approach is that they just want to get on a trend, and they just want to get in the back of the caboose on the train and just ride and call me when we get there. These markets are going to stop at so many train stations along the way that this is like a train you're riding on that's just basically going off the tracks occasionally, even at high speed. So look at this big smash up into here, and they've just cleaned. That's like the high of the. It's the high of the week, That's the high of the week. Well, no, that's not true. The high of the week's here. This is Monday's high. So we came within. This is 30 pips. So we can come back to here. The nice trade would be, we come back to here, we dilly-dally, we go up here, or we dilly-dally, we start crushing out and taking out these things. But if you think we're going to here, you probably want to have sold up here, because you can play the trap. So they're always trapping people. And it's a sad game. It's a sad, sad thing, especially when you look at the typical entry techniques that people would give you, even if they could call, even if they knew where these markets were going. The entries are usually just wow. And getting in where people are getting stopped out is really the in through the outdoor. It's almost like the revolving door. First time I saw a revolving door, I thought, geez, man, this thing, you better have your rhythm down. You're going to lose your. I mean, it's so funny because you're expecting you're at the mercy of somebody's version of how fast that door should spin, which is kind of awkward. Big 300-pound guy coming in the other revolving door, whoosh. But yeah, this thing with the volatility breakout, it just makes life a little easier. Maybe not the 1 minute chart. So maybe put the 5 minute chart in your rearview mirror here, and then this way you can at least tell yourself you have a little bit of patience. Okay, so another big giant canvas order in case we go down for a psycho plunge and retest this ledge down here. Seen this a million times. Come all the way back to here, dilly-dally, then boosh. So the buy stops are stacking up here, and if they're trailing and they decay every 15 minutes, then that's the better way to go, because then you don't have any exposure. As time goes by, you're not buying too high up in here. So far, I haven't had any. I actually bought this whole thing here, so I'm actually long, because I figured this probably is a real breakout here, but this will be one of those days when I think they're going to just take it all over the map, which is kind of like just a normal day in Forex, it seems. It's just running up and down. Okay, so here's possible run to here, so I'll be getting out on something here just because it's falling through the floor, and this is the new ceiling. So it's only about this many pips. It's not a great trade, pip-wise. This one looks like, since we broke out here, we could make it up to here now. Take this out for a 20 pip trap, and then they'll probably rip it back, and I don't know, news is probably coming out at the top of the hour, and so I'm looking for some more pullback. And I'm going to go for the go the distance here and put in a big bank of orders. Looking for that plunge. Probably have to come back another 10 pips all the way to here. This flat top. This looks like where we have to stop out the people that put stops in here, and just have to come back to good old 107. That's why I say trading is really for the dumbest people you can find. Now it's buy stops, and we just dropped quite a bit in the past few pips. 1 minute. Okay, so we got a 5 minute window of psycho plunge here. Looking for a big stop hunt. 107, wow, just right when news comes out. Alright. We're either going down or we're going up. But so they've actually trapped these guys. Now they're up 30 pips. These bears are almost up 30 pips on that trap up there. Here was the 5 minute buy stops, sell stops, 5 minute buy stops, 10 pips in 5 minutes. So this is like 10 pips in 5 minutes trading, really. In the end. Pretty much across the board in the end. Alright, looking for a rally. So, not getting trapped in this breakout theory, and, you know, the big boys that are trading breakouts, they turn into little boys real quick when you're down 30 pips on that breakout. Sure, you were loving it here, but if you didn't scalp the first... I actually bought here, but I got the hell out because, you know, I really think that was going to keep going up there this time of day. Any time of day. The time of day is another big fallacy. The time of day doesn't matter. Like when they trap these guys, they're like, it's making new lows. 10 pips. Better take your 10 pips and run, buddy, because shooting. And that's auction for you, man. And this stuff, 1 minute chart. 5 minute chart, 1 minute chart. Wow. You know, a lot less risky. And people say, no, I won't trade it. Won't trade it. Look how quiet this is. Double top, bottom. That's a few pips. Wow. Golly. Who knew? So, buy at the market a little bit here, since I'm already long from getting in too early up here. So I have to let that play out. Here's the 1 minute chart with the 5 minute. I guess it doesn't matter. I can fix this scale here, because if this thing heats up, I'm just going to look at the other screen for the bigger time frame. But yeah, why wouldn't you trade this 1 minute chart? What are you, nuts? Easy peasy. Come on. Here's 107. You made within 2 pips of 107. And 5 minutes, trade's over, 10 pips over. You're out. Scalp it. You can be a scalper and a swing trader. Just break out your swing trade orders here. Like here's 50 pips, risk 50 to make 100. And just go way down here and put the orders way down here like this. If you think big news is coming out, just put these big chunky orders down here and space them really wide, and just make sure there's enough money in the account. As always, the disclaimer is make sure there's enough money in the account. All right, let's get there. We got a minute and a half now. So get a pop here, rally. At least 5 pips, so hell, I'm ready to get out now. I'm up 5 pips. Look at that. That's what I'm talking about. Look at that money I just made. 5 pips. 6. Almost 6 pips. Look at that. Okay. We'll scalp it, and then we'll wait for the news to come and plunge it down deeper. One more psycho plunge coming. I'll put in my massive canvas order that takes you down to the lows of yesterday. So this is the grid I want to run on like a 4-hour and 8-hour basis across a bunch of different brokers, just so I can keep track of this theory. Because it's kind of hard to believe it works, but it does, because when you look back in hindsight of all of these swings, you just say, yeah, what if I bought with a wider stop? Okay, this looks like a rally's coming, so I'll put a buy stop here with a wide target. And I still got the plunge protection team here. Okay, news right now. Spread should get a little bit wide. I don't know what it is. Some garbage. Just wouldn't matter. I just don't see how that would ever matter. You know, who cares what the news is? This fundamental stuff is such garbage. I don't even, they get people scared. Don't do this, don't do that. Why? Why would you not do that? Are you a trader, or are you just, I don't get it. But I guess that's like the idea that you're golfing. Like trading's like golfing, and you pick out your 9-iron because you're in a sand trap. I mean, you don't know what's coming. I just can't even imagine. So, and you know what's typically coming is a spike, right? You know what's coming is typically the end of the world's coming every moment. Okay, this would be the head and shoulders for all the head and shoulders traders. This is your shoulder, here's your head, here's your shoulder, you're long, and you got your fingers crossed. A 5-minute chart, you're getting triggered on your buy stops right now. If you've been pulling the buy stop trigger this whole time, and so you're in a sideways range here. So now this is the problem. You spend too much time here at this price range. We're either going to have to take this out from the low side or break through the top side. So just space everything super wide like this, because you never know what's going to happen. You just never know. It's terrible. Psychologically disturbing. Not knowing what, like, FOMC was such a disappointing, well, I guess it was actually 50 pips of up and down. It was quite, you know, if you had some random orders in there, if you just had staggered orders in there from buy and sell side. And that's another thing, you can drop buy and sell limits. As long as you have good risk-reward ratios, you can just scatter the market with that stuff. But here looks like that was the breakout. Here's the pullback, and the 5-minute guys are about to, 1-minute guys are about to take out this fractal here. So we'll stay long, and we'll look to take profits here. And if it comes back, we'll get in on the limits. So I'm gonna start running limits now for the possible pullback. Since I'm already long, I want to get in on the stop hunt for the, you figure these 1-minute guys are all, these 5-minute guys are all over it. So they just made, if they scalped out of that first one, they're already up on their trade, right? So people are getting out right now, you know. They'll definitely be getting out here at this 4-minute flag. That's only a few pips, so they're already getting out. So I'm going to get out with them. And now I'm going to get in with buy limits below. Looking for the pullback. So there's so many times, so many chances to get in these markets that, okay, so we're going to blow out the top now. So I'm always going to get in with the trailing limits from here on out. This way I'm not chasing it. Okay, people are going to sell right there. Now look for the pullback. So I can add. Okay. We typically come back, so otherwise, oh well. Let it go. Won't be the first time, but this is it. That's the trade. People are going to sell there. There's the bottom. Just kick it back. Okay, so I'm long. So I picked up a little bit there. And ideally it comes flying way back. But really let it load the wagon itself on this thing. That's my theory. Let the market come to you. And when the market gets quiet like this, yikes, something's up. Even this sideways action, sell stops, and when you look at it like this, it just looks very obvious that using a range without any bias to the range, you don't care if that's a bullish or bearish incident. All you care about is the volatility and the fact that you're breaking out, and when it gets crazy like this, you're either getting in on limits or you're going to get in on the stop of when it goes sideways here. You got two chances to put in your sells and buys. So yeah, this is that's about it. And here's the 1 minute. So big trend here, big uptrend going. Anyways, we should be plunging pretty soon again. And I would just pick up more orders and just go to the time frame that's so here's the 5-minute view. And that's it. Pulling back already. So see the sellers came in here. Okay, now what, buy one at the market, buy one on a stop, and put in some more limits, and sit back, watch the fireworks.